Of course, we've been following these huge swings in the market, specific stocks that have captured the imagination of Reddit users, talking about things like GameStop, which really has become the poster child. The question is, where are regulators in all of this? And what can they do? Let's bring in Susan Kushneryk, partner at Hansell LLP, enforcement counsel staffer for the Ontario Securities Commission. Susan, I'd like you actually to, put back your enforcement hat, put back your OSC hat, and you're watching all these moves. What are the questions running through your mind?
Well, the question is really the same question as this kind of conduct in any other forum. The question is the conduct that the traders are engaging in. There's really nothing new in terms of conduct or market activity in what's going on these platforms right now. The thing that's new is the social media platform and how it amplifies the impact of the conduct, right? So people talking about stocks, creating buzz around stocks. Again, that's nothing new. We've seen that before. The issue is if there's trade, if people are doing it to engage in manipulation, that's wrongful activity. And it's wrongful activity whether it's happening on a social media platform or it's happening in other contexts. So as a regulator, I would be looking at this conduct, I'd be looking at the trading activity, and I'd be looking to see any signs of manipulation or other illegal activity, illegal insider trading, any other illegal activity.
That seems to be relying, Susan, I'll let you finish your thought and I'll follow up.
Well, I was just going to add that the regulators, however, do not regulate the conduct of investors outside of that kind of illegal activity. And they don't regulate what investors say to each other about what's going on with any particular stock or their trading intentions or musing about trading. So it really comes down to whether or not there's any illegal activity or any manipulation.
So I hear that sounds like you're using an old playbook, though, for a new phenomenon. To your point, talking on internet platforms is not new, but what seems to be new here is the degree to which they can be effective. And ultimately, when you see stocks moving 100%, 300%, does that not pick at the thread of financial integrity? And do you think regulators need a new playbook to address what is essentially a new phenomenon?
Well, this is a really interesting phenomenon, and I think that it's important to remember that while we're focused here on this phenomenon, particularly in the securities markets and the impact on the markets, it's really part of a broader discussion. Right. There's a real discussion going on right now about online activity and how that can or should be regulated. And the analogous conduct that we've all seen writ large in the last couple of years is in respect of U.S. politics and the impact of activity in social media on politics and how that's actually translated into real action. And I think like what we're seeing here, people may be dismissive of chats going on chat rooms and otherwise online in platforms that maybe are not as mainstream as mainstream media. And what we're seeing is that those chats and what's going on in those fora are actually having a real world impact. And we saw that in the U.S. Capitol a couple of weeks ago, right? And so the question you ask, I think, goes beyond securities regulators. I think that the securities regulators need to take a really careful look at what's going on this forum and whether they need to consider new tools, as you say, in respect of the forum. But again, I reiterate, the conduct itself is not new. What's new is the platform that, because of the scale of the platform, what it does is it amplifies the impact of that conduct, right? So it amplifies.
What about I guess what about the impact to the investor? So on one hand, I hear your point that the watermark that still needs to be clear is evidence of manipulation. So if it's just a bunch of people who agree more passionately on a thesis than Wall Street or Bay Street is willing to give them credit for, that's not evidence of manipulation. But it could still do some damage to an everyday investor who's sitting at home, runs, a conservative TFSA and says, wow, GameStop's up 100% in one day. What if I put $1,000, $2,000, $20,000 into that? I could double my money in one day. That's where I start to get concerned about investor protections. How do we reconcile the lack of tool books or tools right now with the very real possibility that people could see this and be enticed into the market, and that could lead to mistakes?
I think I share your concern. I think that's exactly right. And again, this phenomenon is something we've seen before. I mean, if we think about the tech bubble 20 years ago, if we think, there've been, frankly, baseless excitement that has caused real investor decisions, real investment decisions that have caused real harm. And I think that the regulators do need to be thinking about it, but it may be that this is where the regulators need to be thinking really hard beyond its enforcement mandate. As you say, the investor who's sitting at home watching this and making a decision to invest, it may be that what the the regulators need to be really thinking about is investor education and financial literacy. If that investor is more informed about how to actually evaluate the companies in which they want to invest, how to consider company fundamentals, how to think about long-term growth, how to think about all the important things to think about in the marketplace other than just the price fluctuation, that could be a real help to that investor and help mitigate the potential risks being created by all this chatter on these platforms.
Susan, we only have about 30 seconds left, but if I can sum up our conversation, I just want to make sure I have the takeaway right. It sounds like what you're saying is, yes, we're seeing this action right now today, but you're not likely to see interventions by regulators today. Any interventions, anything that might happen, are things that will require months, if not years.
I would. The only thing I would add to that is that you won't see any interventions that are different from the normal course. You already have seen some trade halts, and you'll see that kind of activity continue by the regulators. And they will continue to use the tools that they have to regulate the conduct. But yes, an enforcement activity of manipulative conduct does take months to investigate. And I think more generally, conversations about the online activity are something that the securities regulators need to engage in, as we all engage in that conversation more broadly.
Susan, thank you so much for your insights today. Fascinating stuff. Susan Kushneryk joining us from Hansell LLP, former staffer with the OSC.